Britannia is set to post its Q1 FY22 numbers, and this time Britannia is going to be like an exception in the FMCG space because it is going to be a weaker set of numbers compared to last year. Because for Britannia, last year Q1 was a very strong quarter. Biscuits were the first to go off the shelves. There was a lot of pantry stocking, pantry loading, which actually led to a very high volume growth and revenue growth for Britannia. So obviously, given that the high base, we could see that weighing down the earnings in Q1 FY22 for Britannia. Now let's quickly look at what is the numbers that we're expecting. Revenue is expected to decline by 8%. It will come in at 3,146 crores. Profits of the company expected to see a 25% decline, coming in at 409 crores, while the margins also expected to see a sharp contraction, coming in more than 400 basis point contraction in terms of margins, so 17.5% versus 21% in terms of the Ebitda margins of the company. Now, volume growth, we are expecting a decline this time of 10%, and last year there was a high base of 21% volume growth. So that's like an exceptional growth that we had seen, and one-off kind of a growth coming in for Britannia in terms of volumes, revenue growth last time, like I mentioned, because of the pantry loading that we saw coming in, plus panic buying was there last time, and biscuits had seen a very strong demand last time, the same quarter. So Q1 FY21 was an exceptional quarter for Britannia. So this time, that is why on that high base we are seeing a decline in terms of the volume growth. Now obviously same for revenue growth also. High base is impacting the revenue growth of the company as well. Let's talk about the costs and margins of the company. Now, we are seeing an increase coming in the packaging cost, palm oil prices, raw material prices are on a high, and we've seen a sharp uptick coming in these raw material prices in the last 6 months. So that is what is expected to impact the gross margins of the company, and that is why we're expecting a contraction coming in the gross margins of the company as well. Now, obviously, that is in turn going to be impacting the Ebitda margin. So expect a contraction in the Ebitda margins, like I mentioned, more than 400 basis point contraction in the Ebitda margins, as well as the in the base quarter, especially for the Ebitda margins, there was an operating leverage benefit, as well as there were lower ad spends. Now ad spends are going to be coming back to a bit of a normalcy, so that is what the benefit in the base quarter is not there, and that is why we're expecting a contraction coming in the Ebitda margins of the company. The bottom line, that's the profitability of the company, is also likely to decline this time, and that is mainly due to the decline coming in the operating performance and the operating margins of the company. What are the factors that we'll be watching out for in terms of demand trends is something that we should surely keep an eye out for. How are the demand trends actually shaping up for Britannia? What is the raw material cost outlook going forward, pricing strategy there, as well as any commentary coming in on the new product launches for the company are some of the key factors that we'll watch out for from Britannia.